Hello and welcome. My name is Joseph Lugones. What I want to do here is explain in a very simple way how to invest and look at apartment buildings. I want you to become an educated investor. Let's get started. What we're going to cover is what is investing, some basic terms we need to know, and comparing other investments with real estate investment, and more specifically apartment buildings. So what is investing? Investing is pretty much your extra money plus the risk you think you're going to take plus the expected returns you want to make on it plus the time you have is going to determine how much money you actually put into the investment project. So now let's cover some basic terms. The first term is going to be return on investment, or how hard is the money working for you. This number as a percent can be used to compare other investment types to each other. Gross scheduled income is the income generated in your apartment building after a year, assuming it was 100% occupied. Your gross operating income is your GSI minus your vacancy rate. Another term to be familiar with is the effective operating income. This is your gross operating income plus any other income that the property generates for you. Your net operating income is your effective operating income minus all expenses of the property. However, this does not include your debt service. Your capitalization rate, or cap rate, is a percentage that relates the value of the income producing property, and it gives you a method to compare one property to another. However, something to note is that the cap rate is inversely proportional to the value of the property, meaning the higher the cap rate, the less you're paying for the property. The lower the cap rate, the more you're paying for the property. With basic terms out of the way, let's take a look at this example. With an asking price of $500,000, we have an apartment building with 10 units. The rent for each unit is $500 and the vacancy rate is 5%. With washing machines, there is an additional income of $50 monthly. With expenses totaling $20,000, what is the cap rate and ROI for this property? The first thing we need to do is find the gross scheduled income. And since all numbers have to be calculated on an annual basis, the first thing we're going to do is take our 10 units, multiply that by the income per month times 12 months in a year. It gives us a gross scheduled income of $60,000. Next thing you want to do is take into account your vacancy rate. You have your gross scheduled income multiplied by the vacancy rate, in this case 5%, gives us $3,000. You deduct your $3,000 from your gross scheduled income and you have a gross operating income of $57,000. So the next thing we need to do is find the effective operating income. With $50 extra per month, we multiply that times 12 for $600. Remember, all numbers need to be calculated on an annual basis. So your EOI is equal to $57,000 plus $600 equals $57,600. We're almost done. Now we need to figure out what our net operating income is. All we have to do is take our effective operating income and deduct our expenses. Remember, expenses here does not include debt services. So $57,600 minus $20,000 for expenses equals an NOI of $37,600. With the NOI out of the way, we can now determine cap rate. Remember, cap rate gives us a way to compare other investment property types to each other. It's also inversely proportional to the value of the property. To determine our cap rate, all we need to do is divide our NOI by our asking price, and in this case, it gives us 7.5%, or a 7.5 cap. In order to calculate the return on investment, or ROI, we need to make a few assumptions. Assumptions vary from person to person, and that is why in this example I want you to understand that you can change this to fit your need. Only two things I am going to assume. The first is the amount of down payment, and the second is the interest rate of the loan. By the way, if you want to use all cash, your cash flow equals your NOI. With a down payment of 30% or $200,000, your loan amount is $350,000. Assuming an interest rate of 5.5%, your monthly payment equals $1,988. Your debt service is calculated by multiplying that by 12, and we get $23,856. Remember, all numbers are based annually. Now we need to determine our cash flow. Remember, if you paid all cash, your cash flow equals your NOI. Subtract your debt service from your NOI, and you have your cash flow. The last step now is to take your cash flow, divide by your investment amount. In this case, it's our down payment, or $500,000 if we paid all cash, and that is our return on investment, or ROI, of 9.2%. Let's review our example. Our investment amount was $150,000 with an NOI of $37,600. Our cap rate was 7.5%. Remember that our cap rate is inversely proportional to the price of the investment. In other words, the higher the cap rate, the less you're paying for the investment. The lower the cap rate, the more expensive your investment. The cash flow and the ROI of 9.2% is going to help us compare to other investment types. Now let's compare investment types. Using our investment amount of $150,000, a savings account in the bank might pay at the most 1.01% or $1,515. A CD at 1.8% is only $2,700. The stock market, with all the ups and downs, can be very hard to find out what's really going on. Not to mention, they'll give you numbers for 1, 3, or 5-year performance periods. In this example, they really sell you on that this stock is up 75%. But let's take a closer look. Using real numbers, at the end of the day, that stock they told you was 75% really equals 12.5%. And that's inflating the numbers for this example. Now with real estate, it is 9.2% for this investment, or $13,744, and you can take that to the bank. By now you have a better understanding on how to invest and look at apartment buildings. You've also learned why real estate investing really works, and it's considered the best means of investing your hard-earned money. Now you're just a little more educated, and I hope I was able to exceed your expectations as you watched my video. If you're ready to invest today, call me now.